Hey y'all, it's Jay with Heart and Home Group. I have a guest speaker here with us today.
Hello. Thank you for having me.
You're welcome. He's going to be answering some questions about mortgage. So, introduce yourself.
I'd love to introduce myself. First of all, thank you for having me, Jay. My name is Nathaniel Bittman. I do serve as a regional manager here in the East Coast region for a lender, Security National Mortgage Company. And I also get the pleasure of working as one of your loan originators and working with your team. Jay is absolutely terrific at what she does. Very thorough, very detailed, and it's always a privilege to work with you. So thank you for having me.
Well, thank you. All right. So let's get into our first question, and that's pretty much the basics. What are the basic qualifications for a home loan?
So, it's interesting. This is a very unique time. So, Jay, the world is divided up into two parts. And I don't know that a lot of consumers are aware of this, but the mortgage world is really theoretically two parts. There's the government side of lending, and then there's the private sector. So the private sector are like hedge fund companies. We call a lot of those types of loans that are private sector loans, we call them non-QM loans, non-qualified mortgage loans. The qualified mortgage loans, as a result of the Dodd-Frank legislation, are really G-side government lending loans, and those loans are the lower interest rate loans that you see. So things that are, low rates that are in the low threes, high twos, they can be a series of FHA loans, they can be conventional loans, they can be veterans administration loans. If you're a veteran, tremendous, terrific financing today for veterans. And then the last one, of course, I think I may have mentioned conventional transactions. So USDA is another one. USDA is another government loan. And people have a misconception about USDA because USDA, which is rural housing loans, really, if you're in a certain geographical area, it doesn't have to be rural, like way out in the sticks, so to speak. It could be more suburban. So, but those types of transactions offer 100% financing. The basic qualifications, generally speaking, we'll talk about credit in some segment, I'm sure.
Yes, we will.
The importance of credit is relevant. It is a credit-driven loan. So naturally, the higher your credit score is, the better you're going to have in terms of interest rates and qualification standards. Basically, essentially, when you're dealing in a loan, the norm is we typically like to see at least 2 years. 2 years of consistent income, 2 years of consistent employment, and generally about a year to 2 years of consistent credit history. That will give you the best possible opportunity at the highest interest rate. But normally when you go through a government loan transaction, there's a tremendous amount of paperwork that a consumer is going to have, Jay. So please be aware that when you go through the process, and we'll do a segment on the process another time, but one of the key things are making sure that you're prepared with all of your income documentation in advance. Now, you can have gaps of employment, so you can have some of that. We're going to address that too. But the key is that if you have gaps of employment, generally there is some flexibility in that if you are a salaried or a wage earner. If you're self-employed and you have gaps of employment, that can be a little bit of a challenge. There's also a very important distinction between somebody who is self-employed opposed to somebody who might be a wage earner or somebody who is salaried. So people that are self-employed, it becomes really important to note this. It's not just a 2-year history of employment. You typically have to have 2 full years of a tax filing. So if you've been self-employed for 2 years, but you've only have 1 year of a tax filing, that could be a challenge to get a government bureaucratic type of a loan. So the lower interest rate loans may be a little harder to get if you don't have a full 2 full tax filing years if you're self-employed.
But I could qualify for that other loan that may have the higher.
Yes, that's correct. So you're right about that. The private sector, naturally, those are a little bit higher in interest rates, and the rates vary. Those loans, typically you could do a bank statement loan. So if you are self-employed and you have 12 months of business bank statements and or 24 months of business bank statements, or even 12 or 24 months of personal bank statements, because maybe you have a Schedule C, which means you're not incorporated, but you run a lot of your expenses through kind of a private, more privatized entity. 12 to 24 months bank statements can fall into that, but that is a little more of an expensive loan.
All right. Well, that was the first question, y'all. Thank you again, Nathaniel. We'll dive into our next question.
Thanks for having me. We'll see you soon.
All right. Bye, y'all.
Bye.